Good afternoon, everyone, and welcome to today's webinar on navigating the new tax landscape, Income Tax Act 2025 and related amendments. In this session, Himanshu sir and Vinit sir will briefly cover key changes under the Income Tax Act 2025, Income Tax Rule 26, and Finance Act 2026, along with their practical impact on compliance, TDS, TCS, and reporting. We will also discuss implication for the banking, finance, and tax team, the required system and process changes. At the end of the session, we will have a Q&A segment for any queries or clarifications. Thank you. Now over to you, sir. Yes, sir. Now it's visible.
So under the new income tax, 1 minute. So what new has been done under the Income Tax Act 2025? There is a structural reclassification of the TDS and the TCS sections. What is previously there? There are the multiple scattered sections. Section 192 for salary, 193 for the interest on the bonds, 194A on the interest payments on the FDs, 194C for the contractual payout, 194S. There the various sections are there. Right now, it is under the previous Income Tax 1961. Now, under the new Income Tax Act 2025, there is a single consolidated architecture. They have only three sections under the new Income Tax Act. One section is 392, which is for the salary TDS. One section is 393, which is for the non-salary TDS, and the section 394, which is for the TCS. So the fragmented law has been complied under the unified compliance system. So multiple section has been consolidated under the three section only. So for the TDS or the TCS, there is only three sections that is right now prevailing. One is the 392 section for the salary TDS. Second is the 393 for the non-salary TDS. Third one is the 394 that is for the TCS. So fragmented law has been complied under the unified compliance system. So section 392 governs the dedicated salary compliances, salary payments, EPF withdrawals, non-monetary perquisites. These all are covered under the section 392. Under the series 393, 393 is the master TDS provision that is for the non-salary TDS. So this 393 is divided into the four tables, right? So table 1 that is belongs to the payment to the residents. Table 2 under section 393 belongs to the payment to the non-residents. Table 3 for the payment to any person. Table 4 for the exemption related cases, that is the non-TDS, no TDS cases, right? So under the section 393, this is the master section for the TDS on the you can say for the non-salary TDS related thing, which is covered under the four tables. Table 1 for the payment to resident, table 2 for the payment to non-resident, table 3 for the payment to any person, and table 4 for the no TDS cases. So this is the master provision. Then TCS, it belongs for the sales of goods, motor vehicles, notified goods, scrap. So all these are covered under section 394. So 394, they have unified this section under 394 pertaining to the TCS. Now we just move. What are the new rates? My screen is visible.
Yes, sir.
Right. So this is the comparative analysis of the TDS and TCS provisions as amended with the Finance Bill 2022-2026, right? So I have already told you that the TDS section is divided into the three sections only, 392, 393, and 394. And for the no PAN cases, there is a separate section, section 397. Here is the one more important concept that has been brought under the new Income Tax Act. Assessment year, financial year, that has been all combined into the single thing, that is the tax year. So all things right now, there is a no assessment year, no financial year, there is only concept of the tax year. So this previous year is replaced by the tax years. So this is the chart where we are saying that salary under the previous old section is section 192. Under the new section, that is a 392, there is a no change in the rates. Second is the PF, that is governed under the 392(7). This is the main thing, commission and brokerage. Previous section is 194D. Current section is 393(1) and subclause 1 Roman. Then commission brokerage 194H. It is governed under the new section 393(11). For rental, 393(1)(2), renting of the plant and machinery. So this is the comparative analysis we have made. What is the old section number and what is the new section number? After this meeting, we will share this chart to all the participants so that they are having the quick overview. What is the old section and what is the new section, right? So this is the property, capital asset or trust income. So section 194 is governed under the 393(1). Then fourth table is the interest related thing. So interest on securities, previously it is governed under 193. Currently it is a 393(1)(5)(1). So this is the interest others. That is a 194A. That is more important for the banking clients. So it is covered under the 393(1)(5), subclause 2 and subclause 3. So for the C and the threshold and all the things are same. Rates is also same. There is a no change in the rate. Then the contractual payout 194C. It is governed under the 393(1)(6). Professional fees 194JB is governed under 393(1)(6)(3)A. So this is the old and the new section that has been specifically classified. So dividend, previously it is a section 194. Under the new law, it is a 393(1)(7). So more important sections I am just repeating here. There is a one more important thing pertaining to the cash withdrawal, section 194N. Under the banking, previously there is a clause for the section 194N that the TDS needs to be deducted if the particular person has not filed the last 3 years return, then the threshold limit is the 20 lakhs. And if that person has filed the last 3 years return, then the threshold limit is the 1 crore. So right now that section 194N is governed by the section 393(3)(5), and they have removed the compliance of checking the last 3-year return status. And the 20 lakhs threshold has been removed. Now the threshold is 1 crore and 3 crore for the cooperative societies. So this is the more important and the major change that has been done under the section 194N. Threshold of the 20 lakh has been removed. And one more important thing, last 3-year return status that needs to be checked, that also been removed. There is a one more tricky point is there that we will discuss separately. So non-resident also, that is previously the section 195. Right now it is governed under the 393(2), subclause 2. For the higher deduction and the no PAN cases, previously it is a 206A. Right now it is governed under the 397(2). Higher of the 5% or the 20% or the twice the rate. So this is the higher deduction compliances. Under the TCS, they have rationalized the taxation rates, right? Previously, there is a 1%, 2%, 20%, 5%, separate rates are there. Right now, in almost all the sections, they have standardized the rate of the 2%. For the scrap, Tendu leaves, alcoholic liquor. So for all the section, they have rationalized the rate of the 2%. For the LRS related thing also, they have reduced the rate from the 5% to the 2%. For the LRS, educational or the medical, and for the overseas tour packages also, it has reduced to the 2%. So these are the more important changes that has been very important under the perspective of the banking for the LRS and the overseas tour package, where the rate has been substantially reduced to the 2%. So this is the rate chart, and this rate chart we will share you separately after this meeting ends. Now we will take one by one section where the major amendments has been done. So for the banking perspective, first of all, we are discussing what is the TDS major changes that has been done. Motor accident claim tribunal. 1 minute, my screen I am just sharing. One major change is the motor accident claim interest component. Previously, it is very cumbersome process for the banking industry to deduct the TDS on the MCAT interest portion, because previously, unless and until the case has been decided, the TDS has to be reported under the PAN not available category only. Right now, this clause has been removed for the individual cases. Currently, for the MCAT interest, for the motor accident claim interest component, for the individual cases, the banks and the insurance companies, because these are the two cases, two industry where this MCAT interest is applicable for most of the scenarios. For the individuals, there is a no TDS is applicable. For the MCAT interest, motor accident claim interest, for the individual cases, if bank or insurance company is paying the interest, then for the individual cases, there is a no TDS is applicable. For the non-individual cases, the TDS is applicable only if the interest component amount is exceeding rupees 50,000. So this is the important scenario that needs to be needs changes in the system also. We require the separate tagging of the MCAT account. Separate TDS codes needs to be operated in the banking environment and the insurance segment, so that we can tag that account separately as the MCAT account. And we have to disable the TDS for the individual cases. There is a no TDS liability in case of the individuals. Second scenario is the cash withdrawal. I've already told, non-filer validation layer has been removed. Last 3 years return not to be checked. The threshold of the 20 lakh has also been removed. Right now, the threshold is only 1 crore and the 3 crore. There is a little confusion in this section, because previously it was mentioned specifically in the section that if the amount of the withdrawal is exceeding 1 crore, then only on the exceeding amount the TDS needs to be deducted. But right now there is a threshold limit only mentioned. So as per the bare understanding of the act, it was reflecting like that, that if it is exceeding the 1 crore or the 3 crore limit, then on the entire amount starting from the 0 to the 1 crore, whatever amount will be there, the TDS needs to be deducted. So we have already sought the clarification from the CBDT also and the income tax department also. So for that thing, they have told us they are coming with the notification, but till that time we have to follow the law as per the new income tax 393(3) subsection 5 for the section 194N. We need to deduct the TDS if amount exceeding is 1 crore, then on the entire amount the TDS needs to be deducted. But the 20 lakh limit and the non-filer validation layer for the last 3 years returns has been removed. So PAN compliance, I am taking the separately. Now SFT related thing is there, very important thing. Previously there is a no mandatory penalty is there. Right now there is a mandatory penalty of rupees 200 per day. If we are not filing the SFT on the time, then the 200 rupees per day penalty is mandatory penalty is there, and the maximum penalty that can go, it is up to rupees 1 lakh rupees. So this is the major change that has been done under the SFT related compliances. So the compliances of the SFT is needs to be done on a very timely and accurate manner. One more important change in the TDS return compliances. Previously, the correction return filing timeline is the 6 years. For the last 6 years, you can file the correction returns. But right now, under the new Income Tax Act, this correction timeline is reduced to 2 years. So for 31st March 2026, the deadline, the correction return filing up to 31st March 2024, you can do, right? So up to 31st March 2024, whatever correction return you needs to be filed, that needs to be filed before 31st of March 2026. After that, there is a no possibility of filing the correction return. Whatever demands are there, for that the TDS, for that the amount needs to be paid to the income tax department. So it is very important perspective for all the industry. The TDS return correction timeline has been reduced to 2 years. For the last 2 years only, you are able to make the correction return. Previously, it was 6 years, right? For the TCS, I've already told the most of the section, the TCS rate has been standardized to the 2%. One more important thing for the perspective of the banking, for the Form 15G, 15H, Form 15G, 15H has been replaced by Form number 121. There is a no separate. Previously, the Form 15G is separate, Form 15H is separate. Right now, there is a single unified form, that is the Form 121 for Form 15G and the Form 15H. For both the forms, there is a single form only, Form 121. So bank need to accept the form number 121, or wherever the Form 15G, 15H in case of the mutual fund industry also, wherever we are giving the dividends. For the listed companies also, whenever they are giving the dividend, they have to accept the 15G, 15H. Right now, there is a single form only, that is the form number 121, which replaces the Form 15G, 15H. right? So this is the very important thing under the perspective of the form 15G 15H. One more important thing of that yesterday only one circular has come for the form 15G 15H. The circular says previously the form 15G 15H, the you can the we have to generate the unique identification number for each 15G and 15H. So right now, for the 15G, the limit, the UN number will be started with the G, and the 15H, the UN number will be started with the H. Right now, the form number is only 121, single form is there. So they have specified the sequence number of the form will be started with the D. This is very important for the form 15G, 15H. The sequence number will be started with the D only, and thereafter the tax year, and thereafter the tax deduction, the collection account number. So this is the logic behind the sequence number generation. Under the transition module that has been submitted by the income tax department, in this it was mentioned that there will be the separate portal from where the form 15G needs to be generated, and that 15G will have the unique reference number already, and that needs to be accepted by the bank. But currently that module is not started by the income tax department. Till that time we have to accept the form 15G in the physical or the digital manner by the banks and the listed companies or the mutual fund companies. So they have to accept this 15G, 15H like that, and they have to allocate the number manually only. Till that time, the income tax portal has been giving the reference number by their self when the particular individual is generating the form 15G or 15H. So this is a very important thing. One more thing that has been brought is the that is PAN related thing for the form 61 related filing. So previously, the section that has been governed the Form 61 is the Rule 114B. Right now, the current rule that has been governing the PAN related thing for the Form 60 related thing is the Rule 159. So what is the material changes that has been done? I'm just giving that short overview only, and this document we will share. Previously, if suppose the particular person is not having the PAN number, so they are submitting the Form 60, right? They are submitting the Form 60. Right now, the Form 60 number has been changed. Right now, that form number is 1 minute, I'm just telling. Form number 97. Form 60 has been replaced with the form number 97. So there is a major changes. Previously, whenever the person is depositing more than 50,000 in a bank in a specific day, and if that person is not having the PAN number, they have to submit the Form 60. Right now, that law has been changed. Right now, if the cash deposit is exceeding 10 lakhs annually, then only the Form 60 needs to be collected. Second, previously on the cash withdrawal, there is a no criteria for collecting the Form 60, even if any amount has been cash withdrawal. Right now, if the particular person is not having the PAN number, and if they are withdrawing the cash 10 lakh in aggregate level on the annual level, then the Form 60 needs to be collected from that particular customer. For the motor vehicle also, previously it excludes the two-wheeler. Right now, it includes the motorcycles. For the immovable property, previously, if the 10 lakh, more than 10 lakh rupees property you are purchasing, and if you are not having the PAN number, then you have to submit the Form 60. This limit has been increased by 10 lakhs. Right now, the limit is 20 lakhs. For the hotel payments also, previously the limit is 50,000, that has been increased to the 1 lakh. So these are the key modifications that has been done under the Form 60 collection. So this is to be looked after by the banking industry and the mutual fund industry for both. Cash deposit and the cash withdrawal is the more important thing. So these are the modifications that has been done. Apart from that, income tax department has come with the for the mutual fund industry and for the RTA related thing. The CDSL or the NSDL will be giving the centralized agency for the collection of the Form 15G, 15S, so that the unified single Form 15G, if particular investor is submitting, then it will be available to all the listed companies and the mutual fund companies. So that clause has also been introduced, but that has been applicable from the next year. So these are the major changes that has been done brought by the income tax department, which is more particular to the financial sector, which we have told in this meeting. In case anything specific you want to know, please let us know. We will happy to answer. For any questions, your questions you can put on the chat. Questions you can put on the chat if you have any questions. There are the certain questions that has been come over the chat. Whether specified person is still there or not, there is a the specified person clause has already been removed. There is a no clause of the 206 AB. Right now, the specified person clause has been removed. For the PAN Aadhaar linking, the clause is still applicable. If the PAN and Aadhaar is not linked, then that person is considered as the that PAN number is considered as the inoperative PAN number, and the TDS on the higher rates needs to be deducted. Whether we need to change the TDS section in TDS filing form Q1 26-27. Yes, the new schema, the new form has been available under the rules, and the new section needs to be quoted under the Q1 of the 26-27. Can you please elaborate the form 121 matter and also the UIN issue? Yes. So previously the form 15G or 15H, we are giving the separate UIN number for the 15G, which was start with the G, and we are giving the separate UIN number for the 15H that has been start with the H, right? Right now, this has been removed. The single sequence series needs to be created for the 15G or 15H, and all the sequence number will be start with the D, right? The sequence number will be start with the D. Previously, for the 15G, it was start with the G, and 15H, it is start with the H. Right now, it needs to be start with the D. And thereafter, the logic is the same one. 2020 series ka UN number will be there, which start with the D, and the single series needs to be maintained for the 15G or 15H. You are not supposed to maintain the 15G and 15H separate series. Whether filing under the new act is made available, currently, the NSDL has not released the new functionality, but the forms under the rules has been introduced. So soon the NSDL will release the utility for the same. Also, for the LDC, do we need to apply under the new section or the old? So for the LDC related thing, you need to apply the LDC for the previous year. If you go on to the, I'm just showcasing you that thing. If you go on to the traces portal, I'm just sharing my screen. For the LDC related thing, I'm just telling you. On the traces portal, it was specifically mentioned. 1 minute, my screen is visible.
Yes, sir, it's visible.
So you can see filing of the application for the lower or the nil deduction certificate in form 13, 15C, 15D, and 15E, right? So it is the new form number has been enabled, already enabled on the traces portal, and application may be submitted up to 31st 3 to 2026. And this certificate is valid for the financial year 26-27. So for the new LDC also, that has been already been released on the traces portal. So under the new section only, the for the financial year 26-27, the filing for the LDC that has any entity is applying, they are applying under the new section only. Then should be there, will be there. Yes, valid or not. Will this be certificate will be valid or not? Yes, it is valid if the new section has been meant under section for the. Yes, it is valid. Then, is there any changes in the 15 CACB? There is a not a much change in the 15 CACB. Only the form number has been changed. So, if the new form number utility is available on the portal, then through that utility we need to generate the 15 CACB. But as of now, there is not a much change under the 15 CACB. There is the same only. And till the time if the utility is not released under the old utility only, we need to generate the 15 CACB. We have received the lower deduction under for the financial year 26-27. This certificate is valid, even though it is the if the old section is mentioned, that has been specifically clarified under the new act. Any other questions? If anyone is having, please let me know. So after this meeting ends, our team will share you the new TDS rate chart, UN circular, and what are the important things that has been applicable for the banking, financial institution, mutual funds, industry. So that we will share, and for the listed companies, we will share all the documents. In case any questions are there, we are happy to answer. Just put on the chat box.
Hello. So I think we have covered all the question that we. So okay.